Welcome, hugs and kisses. Thank you for stopping by the channel. My mother thanks you, my father thanks you, my sisters and brothers all thank you. Please stay until the happy ending. With the current price of Bitcoin, I am a little worried for the leveraged longs. On January 1st, 2025, MicroStrategy made a move that made me nervous. They switched their accounting from one style to another. Everything they did was legal, but the name of the accounting method they switched to, mark-to-market, is the same accounting Enron used to defraud its shareholders and ultimately destroy the company in the end. MicroStrategy transitioned from the previous intangible asset model to fair value accounting, commonly referred to as mark-to-market accounting. The change was made following updated guidance from the Financial Accounting Standards Board that requires certain crypto assets to be measured at fair value, with changes reflected in net income. The term mark-to-market is historically associated with multiple companies, including Enron, which used a form of mark-to-market accounting prior to its collapse in 2001. This video explains mark-to-market accounting in the context of MicroStrategy's Bitcoin holdings and provides historical context by examining how Enron used mark-to-market accounting prior to its collapse. The focus is on factual comparisons and differences between the two cases. Mark-to-market accounting, also known as fair value accounting, is a method in which assets and liabilities are recorded at their current market value rather than historical cost. Under this approach, assets are revalued at the end of each reporting period. Unrealized gains and losses are recognized in earnings. Financial statements reflect current market conditions. Mark-to-market accounting is widely used in financial institutions for securities, derivatives, and other tradable instruments. MicroStrategy holds a substantial amount of Bitcoin on its balance sheet. Under previous accounting standards, Bitcoin was treated as an indefinite-lived, intangible asset. Companies were required to record impairment losses if the asset's value declined, but they could not mark the value upward unless the asset was sold. Following updated guidance from the Financial Accounting Standards Board, certain crypto assets must now be measured at fair value. This change allows, and in many cases requires, companies to record both unrealized gains and unrealized losses each reporting period. As a result, reported earnings may fluctuate with Bitcoin's market price. The balance sheet reflects current Bitcoin valuations at each reporting date. Enron, an energy trading and utilities company, adopted mark-to-market accounting in the 1990s for its long-term energy contracts. Enron's business model included entering into multi-year energy supply agreements. Under mark-to-market accounting, the company estimated the total projected profits from these contracts at inception and recorded those estimated profits immediately as current income. These valuations were based on internal financial models rather than observable market prices in many cases. Subsequent investigations revealed that Enron used aggressive assumptions and, in some cases, off-balance sheet entities to obscure liabilities and inflate reported earnings. Enron filed for bankruptcy in 2001 following revelations of accounting irregularities. There are structural similarities in accounting method, though not necessarily in execution. Use of fair value accounting. Both companies applied mark-to-market accounting to significant assets. Earnings sensitivity. In both cases, reported earnings are directly influenced by asset valuation changes. Market-dependent financial statements. Financial results can fluctuate based on assumptions or market pricing conditions. Material asset concentration. In both situations, a significant portion of reported financial performance is tied to a specific asset class. Despite the shared accounting terminology, there are important differences. Asset type. MicroStrategy's Bitcoin holdings are traded in active global markets with observable spot prices. Enron's long-term energy contracts often relied on internal valuation models without transparent external pricing benchmarks. Revenue recognition. MicroStrategy's unrealized gains or losses reflect changes in market value of a held asset. Enron recognized projected future profits from contracts as immediate revenue, based on forward estimates. 3. Regulatory environment. Enron's accounting practices occurred prior to the implementation of the Sarbanes-Oxley Act of 2002, which strengthened financial reporting oversight and internal control requirements. MicroStrategy operates under current regulatory standards and SEC disclosure requirements. 4. Off-balance sheet structures. Enron used special-purpose entities to move debt off its balance sheet. MicroStrategy's Bitcoin holdings are reported directly on its balance sheet. 5. Transparency of valuation. Bitcoin has a publicly quoted market price across exchanges. Enron's contract valuations frequently depended on proprietary internal assumptions. Mark-to-market accounting carries certain risks for shareholders. Earnings volatility. Reported net income may fluctuate significantly. Balance sheet variability. Asset values may change materially between reporting periods. Debt covenant sensitivity. If leverage is present, financial ratios may shift with asset price changes. Market interpretation risk. Investors may respond to reported earnings swings regardless of underlying cash flow stability. It is important to note that mark-to-market accounting itself is a recognized accounting method. The risks arise from asset volatility, leverage levels, and the assumptions underlying valuations. Following Enron's collapse, U.S. financial regulation changed significantly. The Sarbanes-Oxley Act introduced enhanced internal control requirements, executive certification of financial statements, increased auditor independence, stricter disclosure standards. These reforms altered the financial reporting environment in which public companies operate today. Mark-to-market accounting reflects assets at current market value and records unrealized gains and losses in earnings. Both Micro Strategy and Enron use mark-to-market accounting for significant assets. However, the nature of the assets, valuation transparency, regulatory oversight, and revenue recognition practices differ substantially. Understanding these distinctions is important when analyzing financial statements and evaluating accounting risk exposure. MicroStrategy's January 1, 2025 accounting change reflects updated fair value standards for digital assets. Although Enron also used mark-to-market accounting, the nature of the assets, valuation methods, regulatory oversight, and financial reporting practices differ significantly. Understanding how mark-to-market functions and how it differs across asset types is essential when analyzing financial statements. Although both companies use similar accounting, MicroStrategy is doing everything by the book.
Thank you for watching. Please like, subscribe, and comment below.